We're going to start tonight with a balancing act of sorts from the Bank of Canada today, issuing an update on the stability of Canada's financial system. On one side, arguing this country has overall weathered the affordability crisis storm well, but still highlighting significant risks, particularly around individual debt levels and a coming onslaught of mortgage renewals. Here to break down that risk assessment and how it could impact the bank's coming rate announcements is former Bank of Canada Governor David Dodge. Mr. Dodge, great to have you back on the show. Thanks for making the time.
I have, Ashley.
So the bank today talked about essentially higher debt servicing costs, the impact on individuals, but also on businesses as a primary risk factor against the backdrop of financial stability overall. What is your assessment of how big a risk factor that is?
Well, it's a risk. And as the governor pointed out, it certainly becomes a risk if we run into a period of high unemployment. Or if unemployment increases significantly, then it becomes a risk. I think one would have to argue that at this stage, however, at a time when we're also looking at interest rates coming down in 2025, and they would come down even faster if indeed employment growth slowed. I think one would not want to overemphasize that risk.
So when you look ahead to, I guess, what those interest rates look like in 2025, if you're a Canadian sitting at home who's up for one of those mortgage renewals, I think the concern would be the rates aren't going to go down that fast. So I might get a bit of a better deal than I would this year or last year, but it still will cost me a lot more. Is that a fair kind of a reaction to have?
Yeah, I mean, you got a superb deal in 2020 or 2021 when you put the mortgage
sure did,
out,
yeah.
Right? So, I mean, if we might expect that 5-year mortgage, 5-year rate, bond rate on which the mortgages, 5-year mortgages are based, maybe to come down 1.5% between now and the end of 2025. I think that would be reasonable. So yeah, the end of 2025, it'll be a little bit worse than it was in 21. That's for sure. But it's still really quite a manageable thing for most people. Not all, but for most people. I would have said the bigger risk on the financial side is actually in the business sector or in with the non-bank private lenders, because valuations are pretty stretched at the moment, and they could come down quite a bit. And those non-bank lenders, in particular the private lenders that have taken a bigger chunk of the market, there is a real risk there, not just in Canada, but globally on that side.
And that is more, my understanding from the report is more small to medium-sized banks. So not necessarily the big banks who have a smaller portion of their portfolio. Yeah.
The big banks that are well regulated, that's not a problem. But the smaller lenders, and in particular the private lenders, who have taken a larger chunk of the market over time, there is a risk there.
And when you talk about, when you reference the sort of manageability of so far the changes to interest rates as far as mortgages go, and I'll get back to the other risks in a moment, but I just think I know a lot of Canadians at home are worried about this prospect. I found it interesting that only mortgage defaults have remained below 0.5%. Based on what you know from the data, what have Canadians been doing in order to make up for the increased costs? And how worried are you about their ability to keep doing that as more of them face these mortgage renewals?
Well, for some people, it's going to be tough because they really overextended themselves because they got such a great deal in 20 and 21. So for some people, it undoubtedly is going to be a problem. But for for people that are relying on their paycheck week in and week out to cover the mortgage, and if something happens in the labor market and those paychecks don't come, then that's where a problem comes. Historically, absolutely, we've had problems, and the problems have always occurred at a time when unemployment is rising.
The report also talked about the degree to which businesses are or aren't able to handle the changes in interest rates and the increase in debt loads. And the assessment essentially was that larger companies are handling the debt loads very well. It doesn't pose a significant risk, but it's a different story with small business. What's your read on that, Mr. Dodge?
But I think that's always the case. The small business person is always at more risk than the larger company, largely because the small business person relies on bank lending and so that they can run into trouble much more quickly than the large business. They don't have as diversified a revenue source to start with as big business does. And those debt payments represent a bigger chunk of their cash flow, so that they run into trouble much more quickly than big businesses do, because that amount that they owe is such a large chunk of their weekly or monthly or yearly cash flow.
Makes sense. So as those small business owners, as those Canadians look ahead to where interest rates are headed, we're less than a month away from the next announcement. If you were still serving in your former capacity as governor of the bank, what data would you be crunching in the interim? Would you be looking at most closely in the interim?
Well, obviously we're looking at growth overall, so the output data, and very much we are looking at the particular pressures that are on firms, and so obviously we watch the wage data, but it's not just the wage data; it's the input costs that can squeeze a firm, and that can happen for a number of reasons, external to Canada, but internally in Canada, probably the biggest pressure would be if all of a sudden the wage bill goes up. And so you always watch the wage side because it's an important input cost, and that is domestically determined. Whereas some of the other factors that are going to create problems in terms of cost increases really are external to the country. And so there's not very much that we can do about it, or certainly there's not very much the Bank of Canada can do about it.
Okay, on that note, I'm going to leave it. Mr. Dodge, appreciate your analysis as always. Thank you so much.
My pleasure, Bessie.